10-year yields were about 3 basis points from their lowest in a week, but they've seemed to rise on every appearance that the Fed chief has made lately. Are we going to see that again this time around?
I think we will see a lot of volatility today, even if we don't necessarily hear anything new from Chairman Bernanke. We think a lot of the message will be pretty similar, just kind of just trying to distinguish that even if they do begin tapering later this year, that it's not an actual change in policy in terms of tightening, but just a little less easing.
Yeah, he keeps trying to drive home this point that the central bank is just easing up on the pedal. It's not driving investors off the interest rate cliff here, but rates have gone up. So doesn't it become harder to make that case that tapering isn't tightening?
I think it has been tougher for him, but I think the opportunities had over the past couple months to explain his message. I think markets are starting to distinguish between the difference between tapering and actual tightening of the Fed funds rate. We're still looking at probably somewhere around 2015 before we actually see interest rates rise, rather than just the tapering and scaling back of the current asset purchases.
Hello and welcome in from Sunnyvale, California, and it has been warm. I am Mark Vieira, your host, and I'm going to take you on just some basic stuff here in the stock market. Okay, let's go and see how we did for the week. You know, everybody knows how we did for the week. We pretty much just they have exploded to the upside. And you know, do I want the markets to go up every day? No, the markets should not go up every day. Being up 18%, over halfway through the year, we're up over 5% for the month, and 0.71% for the week. Right here, I'm looking at we're 0.3% from the previous high. We're making new highs. And where do I go from here? It's take a look at some moving averages. These are all the icons on the desktop just set up for my weekly log. I'll show you that here in a little bit. Let's open up. Okay. Now we have the 20 days starting to come up and kiss the 50-day, and this is 3 years. Well, actually, you can only see about 2 of them here on this. I just want to point out that when the 20-day goes above the 50-day, this is the kind of thing you're going to see. 20-day above the 50-day, this is what you're going to see. You know, 20-day above the 50-day, and wow, look at that leg. Now, we just had a correction. Okay, it wasn't much of a correction, but it was a correction. We saw a micro bear trend. There are 3 to 4 on average bear trends, smaller bear trends per year within a yearly time frame. And this is one of them. You know, you can see back here, you know, correction, and I was, you know, 0.5% from that 8% marker that I was looking for. And I don't know, maybe the operators are listening to my videos. I don't know. Yeah, that's crazy. Now on a smaller time frame, you can see that the 5 days is sloping, so we could see a period of consolidation. I'm not really expecting the markets to go down too much, and I'll get into why here in a little bit. So let's start off really looking at some long-term charts. Find these in my log. This is top trend line from these levels, from the bodies, and from the highs. And this is just a move it up line as it goes along, seeing when that's going to end up being a permanent, you know, topping trend line. But to zoom in now, we're seeing this is an important level, this previous high. We're just a little bit above that. We are back into this parabolic channel and breaking through various pivots along the way. So the long term is saying that pretty much what we've seen. And I like to refer to this fib extension, this is intermediate weekly, little 7% correction that we had here, 7.5%. This tells me that there is room for this thing to run. So, don't let anybody tell you that we're overextended and it's not going to go. It's going to keep going until it doesn't. And this tells me that we're not even to 50% of this leg. So I'm not excited looking for any kind of a top quite yet. Just since we just had a correction, 7%. Going to remind you that. So let's look at chart patterns. We're starting to see some possibilities. When something just moves straight upward, you're not going to get any kind of up and down movement, is where patterns start taking form. Now, to illustrate more of how much further this can move up, is we've had a flag is downward sloping. When it's high and tight like this, is actually a much better performer. It's more reliable in terms of meeting price target. So we had this ascending type little small triangle breakout, and that target's pretty much there, but the target I'm really concerned about now is this high and tight flag. And how much can we get out of a high and tight flag? Well, let's see, daily flag. Let's take a look. Now, I base these measurements on this distance, okay? And in this case, the multiplier now I get from a website that I source in. At the end of my log, you can find out that information. Really an awesome database that this guy has tracked over the years. In any case, now a flag, you want to add it to the bottom, and for downward breakouts, you subtract it from the top. There are no downward breakout numbers for the high and tight flag, but 1745, I think that is going to be a number to be looking for. And let's see, let's get into volume, or should I look at the VIX is interesting. A lot of people say that it's kind of lost its, I don't think it has. I think it's in a complacent level, and that's where most people are going to say, that it's time for a reversal. When it starts getting low, you want to look for stocks to start going down. Well, it's got a lot more room to go lower, and I think it will. I think the VIX is going to continue to show us what's going on. So I haven't ruled out looking at the VIX. I like the VIX. It's a volatility index in any case. Let's look at some volume here. All right, I got all kinds of... where to start? Back here, this is a buying climax. We had a huge run up in volume. And I made a note here that's about 250 million shares on the SPY traded in one day. This is looking at volume by time. This is looking at volume by price. All right. So I made a mark here, and I figured, okay, well, we're not necessarily going to see another 250. I mean, that was a good sign, to act on. And now I want to remember that now. If volume gets up, volume is not a bull's friend. The whole 4 years we've been running up on thin volume. So volume has, low volume favors the bulls. Any spike up in volume, and you can see it started lowering down here like it was going to come back. But still, that amount of volume, above average volume, turned out not be very good for the bulls. Okay, that's where we just got an initial first leg of the correction, did an ABC, and measured move down and had a selling climax here. So this is where buyers started stepping in. Now, what's interesting to note is that the buyers, actually, there was more volume, more shares changed hands on buying than it did back here at this 250 million on selling. So I think that's interesting to note. I also think these indecision dojis reflect volume spread analysis says, that there's an effort versus result discrepancy. If I have the same amount of volume, back here, and I've got this kind of body, here this price barely moved. So that speaks to market elasticity. And what do I mean by that? Okay, well, the amount of shares changing hand is increasing. And that tells me that at this price, people are, or investors rather, are buying at that price. So that is elasticity increasing. Okay, not a whole lot, but increasing. MACD, moving average, is sloping. I think we will see somewhat of a return to one of these volume nodes. We'll look at the intraday and get a better grip on that. But the presence of supply is showing up at this price, so I think we've reached somewhat of a short-term peak. But I do believe overall we will see more to this bullish leg. What else in here? What else? Let's see. The relative strength index. I'm seeing lower highs and lower lows. That's a bit significant right there. And maybe something further out to be looking for. This is the hourly SPY chart, and this is a volume node that stands out that maybe might build up more volume at that price and be the next point of control, and then we'll see, point of control moving up the volume nodes. So we're getting fairly consistent confirmations to our daily chart. Slightly overbought areas, lower highs on the strength, the tight bodies, of course. These dojis are speak of discrepancy, and that's I like when I see a doji, and then I can look at how the story has been unfolding in between before and after that doji, and get an understanding of why. There's always a reason why. And I think what it is price is not affected by the increase of volume, failing to find supply present, and the price is moving upward. Finally, increased volume on the move up is bullish, but as volume grows, the more the volume increases, I think the more likelihood we'll see either a climax or just where the operators will like to stick shareholders up there at that higher price. So I think that's sort of what's going on right now. And so I'm gonna wrap up this video here. This is what I see for the week. I think we're going to continue this slow melt up, and I'm just looking for something flat this week. I don't think we're going to move up big. I don't think we're going to move down. I think melt up is more likely going to be, something in that order. And that's about it. You want to check out my log, and where I ask the serious questions that nobody really cares about. I mean, some really fun questions. The local news is pronouncing the airline's Asiana, and I always thought it was Asiana.
Asiana Airlines this morning.
So check that out, and I will see you on the boards.